Hello, today is Saturday. It is the 15th day of February 2014, and welcome. Let's take a look at gold on the daily, the weekly, and the monthly time frames. And before we do that, I want to go over a couple mainstream articles for about 3 or 4 minutes. After all, these are web pages and videos that I really don't watch that often. I'm not a big fan of the mainstream media. However, it's important because a lot of people are tuned in to this information. I was curious to what they had to say. So I went to Bloomberg and, well, they're talking about 3 unique ways to play gold. And this is a video, so I clicked on the video, and right at the very beginning of the video, they said 3 very short sentences. Sentence number 1. GLD, IAU are the obvious way. Sentence number 2. Everyone knows those. And sentence number 3. Those are physical gold. And they continue on 3 unique methods where an ETF of GLTR, gold call options, and advisor shares gold. Of course, all 3 of those are based on the banking system. So let's go over this. These are the obvious ways to get into gold. And I think a lot of the biggest reason why they're obvious is because every single time the mainstream media talks about gold in the United States, even Canada, it gets sent right to their country's ETF. In the United States, GLD, IAU. They got it set for everyone knows those. Well, you read those articles, see those videos every single day. They say it every single time. Of course they're going to know it. And then those are physical gold. Not for you if you buy it, but this is disturbing in that I would expect there to be a significant amount of individuals who are buying these ETFs with the full expectation that they have gold in some sort of vault and some sort of safe somewhere in this world. But no, they're buying it based on a price in US dollars, which they can sell later on in that of US dollars. And they're talking about unique methods of buying gold. Well, I think in order to know good unique ways of buying gold, it's good to know what the word unique actually means. And well, here's a definition of unique. Unique. Okay. Well, it's an adjective, but looking at some of the different definitions of it: having no like or equal, incomparable, limited in occurrence to a given class, not typical, unusual, so something that's very uncommon, of course. So if I were to guess, gander, try to figure out the most unique methods, something that's not common, I would guess that it would be somewhere in the area of actually buying the physical gold bars, buying the actual bullion 1 ounce, quarter ounce, half ounce rounds, and then of course protecting them in the best measure that one can. That's how I would view that as, and it's really rare, if impossible, for the mainstream to talk about that situation. Then I went on to CNBC, and their article title was "Gold Bears Run for Cover as Winter Cold Bites United States Economy." And well, this video starts off with the CNBC host stating there is concern that this bumpy data isn't really because of the weather. Maybe there's something worse going on with the economy. And well, if you really, really want to believe that the weather getting colder is affecting the price of gold, I'm just going to shake my head and say, okay, let's now move on to these charts. Starting off within the daily chart, which I showed silver yesterday. This is a little bit different because it's continuing its breakout pattern. Friday was day number 4, starting here, where the lowest price was above the 18 average of highs. That's a bull market when that's in place, and it's been in this uptrend pretty much since in here. Situation is You break past up in here, you stabilize within the band, you break resistance, stabilize even some more. So in here, this is where you can state, okay, this is now moving into an intermediate term bull market. It has had one decent leg higher, of course, that was this week, getting past, of course, the Fibonacci resistance from this high. This is a daily chart. Let's now move this on to the weekly chart. And within this, it's got a little bit of a different story. Just like silver, you had a situation where you broke above this 18 average in a nice uptrend, and then stabilization period. So now when you're stabilizing, for this to be in a bull market, it needed to break above this resistance, never did test that area. And then from that point forward, you can see how this band was resisting. This day here was the day where it broke down, or the week I should state, and put this into a multiple week bear market. Since that point, of course, you had this little breakout here, which was smaller to that of silver, a retest of this previous low. And of course, this week has broken past it. So now again, you see the situation. Of course, this band for the last month or so has been sideways. Now that it's above it, you're going to start to see this band start to rise. What's important whenever it resists, whether it's now at about 1320, 1350, or 1400, that when it comes back to it, finds a support, something like this, that it breaks past established resistance. Then at that point, you can say on the weekly chart, we are in that of a bull market. Final chart, which would be the monthly chart, which is fairly interesting. And since this thing got going back at the start of the millennium, right around 2002, from the low of 251.70, it has pretty much been up non-stop up until 2012. There was a little shakeout in here, but very little, enough where the 18 average band was unable to decline. However, over the last year or so, it has been in a declining level, finding perfect support at really the 23.6% Fibonacci level, hit twice. More often support is tested, more likely it is that it's taken out. So obviously looking at this, next support level, you could say is 883 or about 900. That's, of course, if it does break down. I'd still be looking for the possibility of this failed breakdown, which is because it's had a significant period below this 18 average, but it's got to get above it first. So therefore, right now the 18 average of highs is 1420. It would realistically have to get up to about here, start to see this band start to increase again. And then at that point, this thing could very easily turn into that of a bull market. Well, will it do that? I don't know, but at the same point, what's more probable? Is it more probable that this general area has been or is the bottom, and it will have a test of this high, or we're just going to go down to 900? What's more likely, 1800 first or 900? That's how I look at that. If you were to guess, my guess is much greater than a 75 to 80, but maybe we'll say 75% to 80% shot of hitting here before we hit, if we even ever do hit this area here. Okay, I'm going to finish off this video. I'd like to thank you all for tuning in, and have yourself a great weekend. Take care.